That stock still down about 3%. Sandeep Shah of Motilal Oswal Private Wealth is also with us. Sandeep, good afternoon. Seeing some bit of accidents today in the broader market, Strides for one, SRF the other. Your thoughts on the kind of action we have seen in the mid caps?
Well, obviously there is a lot of punishment which is being given to companies that don't report good, strong earnings, as well as companies that disappoint on earnings. This is also a bit of a reversion to mean happening. Last calendar year was a great year, an outstanding year for mid caps. There were huge inflows which were happening into mid cap funds as well. This year there's of course been a rationalization of funds. I think that there has been some selling which has happened because of this rationalization in mid caps, because of which we've seen some wanton selling. And so what has happened is that when companies report good numbers, and given the rationalization that's happened, there haven't been enough people who've been there on the other side to take a longer term view of companies. And therefore we've seen that a lot of stocks face significant selling pressure.
Sandeep, good afternoon. Good to have you on the show. I want to talk about the event, as Anuj referred to it, the event that kind of made this market top out, at least in the short term, if you think that is really a top. So at about 10,900, has the current rally run its course? What next really, now that Karnataka is behind us?
Yeah, well, just to put things in perspective, in December, on one of your earlier morning shows, I had given a target of 10,800 to 11,000 for the Nifty. And after we hit 10,800, though the Nifty kept getting higher, mid caps and the broad market kept correcting. And actually, I saw a 10% correction was quite likely, which actually happened post that. Now, we've seen a pullback closer to about 10,900, and it's been a bit of buy on rumors, sell on news, with the BJP actually winning, being the single largest party in Karnataka. But I think the message, one of the things that the market didn't like was the fact that their vote share has actually decreased slightly. So in that sense, they're not really better off than they were in the previous elections, though through better political management, they've actually managed to get far more seats. I think that given the sell-off that's been, or the selling that's been happening in mid caps, the fact that crude has been on a boil, I had actually mentioned in the December show as well that I was comfortable as long as crude doesn't go above $80, and we've pretty much got above $80. And I think if the oil sustains here, then that's obviously negative news for the markets, because it will actually impact earnings, it will impact inflation, it will impact the current account deficit, it will impact interest rates. So all of that. So from that perspective, if you were to look at markets, I think on the other hand, earnings momentum, I think, is clearly picking up. If you look at the first 20 Nifty companies which reported earnings, we saw a top line of about 19%, EBITDA growth of about 14%. And if you look at the broader market, our Motilal Oswal coverage, almost 2/3 of them, of course it was the earlier part of the season, reported results in line or better. So from that perspective, given the strong earnings trajectory, while we could see this correction continue a little longer, I'm inclined to want to buy the dips, and I think that we could still see a new high for this calendar year, though politics and crude will continue to weigh it down. But this is a market, since the long-term bull market is in place, you should be looking to buy the dip, or you should be looking to, stagger in your purchases.
Okay, let's do one thing. We'll take a break on that note. Sandeep, stay on with us. Of course, on the other side, we'll also have Yogesh Radke of Edelweiss joining us to map the mutual fund trends for the month of April in terms of the stocks bought and sold by the mutual funds.
Welcome back. Couple of stocks trying to battle the down move. Asian Paints has seen some buying. Interesting. It's in the green. There is a lot of buying on Hindalco after the drubbing the stock got post numbers. Now there's some semblance of an excitement that's kind of building up. So you can see Hindalco surging as well. And of course, no stopping the Bajaj twins. We won't get tired of saying it, no, because of the way these stocks have moved. Bajaj Finserv is now clocking gains of almost 4%. Sandeep, that actually brings me to the NBFC side of the market, because in this results season, if there's one universe that has almost uniformly delivered great numbers, it's got to be NBFCs. You know, housing finance companies, consumer finance companies, even some of the insurance companies. How are you dissecting NBFCs, and what would you pick?
Well, continue to remain bullish on the NBFCs, and I think, the message from this result season, even on the NBFC side, remains that quality delivers. There were significant concerns that, given the way bond yields have risen, given the fact that a lot of the NBFCs, do have to resort to wholesale funding, the fact that they don't have low-cost CASA, the fear was that earnings will not be supportive, and they will actually disappoint. But given the strong distribution and franchise that some of these companies have built, given the fact that they do tend to be able to access customers which banks are not, given the fact that they are far more flexible, I think companies which have a very strong, robust risk management platform, as well as a strong growth engine, including some of the companies that you mentioned, will continue to deliver, and I don't see why they will not. These remain secular growth stories in India. Credit remains in India significantly underpenetrated, and I think that you will continue to see growth from the stronger companies, or the companies, the larger ones, or the ones who are actually leaders in their space for the next 3 to 5 years. So you should continue to stay invested in the sector, be with the best companies here, be with the leaders, including leaders in the smaller spaces or the niches, and buy all dips there.
Okay, Sandeep, stay on. Let's just get some more strategies out of the way, because the market is now seeing second round of decline. In fact, 10,615 now on the Nifty, so that I think is not quite yet the fresh intraday low, but headed there. 10,601, of course, has been the series low, so that's the important point. Sandeep Wagle is with us. Sandeep, good afternoon. What stocks are you trading?
Afternoon, Anuj. I would go with a buy in a Britannia, stop loss 5580, target 5760, and a sell in a Arvind, stop loss 413, target 395.
Okay, Sandeep, thanks a lot for those trading ideas. By the way, SRF is now down 15%. Just pull out that intraday chart, 15% and counting. So obviously, those conference call highlights not helping, and that's a temporary freeze, I think, in the F&O space. So once it opens, it will be interesting. But for now, down about 15%. Sandeep, final thoughts from you then on a couple of basic market moves. What have you made of the bit of move in IT from the lows, and pharma continuously making new lows? Today, as we speak, Strides is down 22%.
Well, given the fact that globally growth is strong, the fact that the Makkah for IT companies, US also shows strong growth, it's not surprising that a lot of the IT companies have bounced back very sharply. Also, the rupee depreciation, of course, always helps. But I think the noteworthy point here has been that a lot of the mid-sized IT companies, where there were fears, a lot of analysts had almost written off a lot of these companies, they went back to their shells. They've been actually working hard over the last 3 to 5 years, re-engineering themselves, refocusing on different niches, different verticals, focusing on cloud, on digital, and a lot of them seem to have got their act in place. And I think that is the bigger message, compared to the larger companies, where a few of them have done well and a few of them have done averagely. The real story has been really mid-cap IT. And I think it's really heartening to see that there are a lot of mid-cap IT companies which, even if they never become seriously large, will remain good, strong investment candidates and will continue to grow at a reasonable pace over the medium to longer term. Well, on pharma, the double-edged sword of falling generic prices in the US because of consolidation of buyers, which has been leading to continuous and almost steady, almost non-stop erosion in generic prices over the last couple of years, along with the FDA inspections, plus the fact that, while it may sound paradoxical, the FDA, US FDA, has also quickened the pace of generic approval. So on the one hand, you have companies whose plants are non-functional. On the other hand, you have a lot more competition in the drugs that are being sold in the market. And I think it's really a function of that. Of course, there have been companies who have tried a different business model, who've been actually may have been selling off their assets and where it made sense, or actually restructuring their businesses, where the market hasn't really perhaps either understood that or has actually taken that negatively. So you might have had isolated cases like that. But I think the real problem remains that. And until we see that generic prices in the US really start stabilizing, or we find that a lot of players decide that it's just not economic, and it sounds strange, but the most profitable market for generic companies globally, that market is no longer profitable to sell into. Unless that happens, and we start seeing supply reducing there, till such point of time, pharma will continue to be under the weather.
All right, Sandeep, good talking to you. Thanks for joining us on the show today. Well, that's an outlook coming in from Motilal Oswal Private Wealth. Before we move on to our next guest, just quick check back on the screen.